Hey guys, it's Wave 618. It's the 4th of May 2019. We're approaching 9 p.m. BST. So today's video is going to be an update on Bitcoin. As you can see from the title of the video, I am looking at a long-term projection of a price target around $370,000 for Bitcoin. It sounds crazy, but I'm going to justify it within this video. As you've seen already on many instances from the genesis in Bitcoin from 2011, we've seen these parabolic moves, and I'm going to show you why I'm projecting that $370,000 mark based on these parabolic moves. So that's what we'll be discussing in today's video. We're going to be looking at it from an Elliott wave perspective, and we're going to look at that count, the Elliott wave count, all the way from the beginning, so back from 2011. Because it's very important with Elliott wave. If you're going to forecast future waves, you need to have a correct wave count from the beginning. If that's incorrect, it means every wave that you count from then onwards will be incorrect. So it's very important we get that right, and that's what we're going to be focusing on in today's video. There are two different counts that could play out, and I'm going to be addressing both, making them both very clear to you. And it's very interesting because I believe we're at a point where we might be able to invalidate one of those counts. So that's what we're going to be discussing in today's video. If you're interested, stay tuned. Alright guys, so let's get started. So we're looking at Bitcoin on the BLX chart here. We're on the weekly time frame and we're on the log scale right now. Now you can see first of all, the wave count that I've been using so far has been as follows. So I've got this as the first 5 waves up. You can see here 1, 2, 3, 4, 5 waves up to make a wave 1. Then we have a wave 2. And then you can see this following wave 3 is made up of 5 waves. So you've got your wave 1, 2, 3, 4, and 5, which looks like a bit of a, and then we see quite a triangular wave 4, and then a breakout to form a final wave 5. Okay, so this would make our major wave 1. Then we get a wave 2. Then our next parabolic move up makes our wave 3, and then this would be wave 4. Okay. Then obviously leading on to wave 5, and I'll discuss why I feel like this may have bottomed based on this count. However, first of all, we're going to address this bit because this is where it's ambiguous and this is where there's 2 potential counts. However, this is my preferred count. A lot of people were wondering how I got this count, which I haven't shown previously before, so I'm going to just address that in detail now. So I've mentioned it quite clearly. There's 5 waves up here. If we just come off the log scale, it's actually even more apparent. So you can see here these 5 waves up quite clearly. So one parabolic move here, retraced, next parabolic move, retraced, next parabolic move. This is how Bitcoin moves with every wave, whether it's a wave 1, 3, or 5. Any impulse is parabolic. And then it gets this drawn out corrective wave. So here you can see the count quite clearly, 1, 2, 3, 4, 5. Okay, so that made our major wave 1, and then we've got our wave 2 finished around here, and then we get our wave 3 coming up to here, and then our wave 4. Okay, followed by wave 5 from here. So that's that count. As I say, you can see it a lot clearer on the when it's not the logarithmic scale. When you go on the log scale, there is a bit of ambiguity. So, for example, I know a lot of people are seeing the count as follows. So they'll start their count here. This will be wave 1, this will be 2, this will be 3, this will be 4, and this will be 5. Okay. Now for me, this is kind of neglecting the fact that this here was a parabolic move. Again, on our log scale, on our linear scale, we're negating this as a major wave. And I'm not too happy with doing that because for me, this certainly looks like it should be part of the this major wave 1 up to here. Just looking at it. And we'll look at it from a Fibonacci relationship point of view also. But essentially, if this is our count 1, 2, 3, 4, 5, then we're going to see a correction. And not only are we going to see a correction, but we're going to be correcting all of this price action. Okay, now that's going to take some time. So far, all we've seen, so if we go back from the Genesis, using fib time, bring it to our 20k high, and plot our fib time levels. So we've not even hit the 0.236 for this retracement. Now, the 0.236 would take us to September 2019. The 0.382 takes us to October 2020. And then the 0.5 takes us to September 21. And the 0.618 is August 2022. Okay, so it could be a really long drawn out correction if we're using this wave count. So that's a wave 1, a major wave 1. Now we're expecting to see a major wave 2, and that is going to take some time. You have to hit at least a 0.236, and that would be very optimistic if you think that the bottom would occur after hitting the 0.236. Typically you'd expect at least a 0.382 retracement, and that's, as I say, that's taking you to October 2020. Now, it doesn't matter the time. We all want to see Bitcoin go up, but objectively we have to say what we think is going to happen. Now, as I say, this is not my preferred count, but if it is your preferred count, this is what you're looking at. And obviously it's coming up now, and I'll be looking at this a bit closer and explaining why I'd expect it to start coming down straight away, to continue its downtrend if we're following this count. Okay, but as I say, this is not my preferred count. My preferred count is this. So this is our first wave, second wave, third wave, fourth wave, and fifth wave is going to go up higher from here. And I'll be discussing whether or not this is finished in terms of the fourth wave. Okay, again, we'll be discussing that later. Now, I just want to show you some very key Fibonacci relationships here. So basically, you get these parabolic moves in Bitcoin, and they're essentially hyperextended waves. So, you know, traditionally you'll see a wave 3 being a 1.618 extension of wave 1. And then a wave 5 might be a 0.618 extension of waves 0 to 3. You know, that's your classical play out. However, with Bitcoin, you find that the wave 5 decides to become hyperextended rather than just a mild further extension of the overall wave. So here, just to give an example of the hyperextension. Now, it's not so obvious on the log scale, because as price goes higher, price gets squeezed a little bit. We'll come off the log scale in a moment, show it on the linear scale. But basically, this would be your wave 1. And your wave 3 comes up to around the 1.618. Okay? Now, if we do waves 0 to 3, and extend that from where wave 4 finished, we're coming up to the 28.9. Now this is a Fibonacci relationship, okay? In order to get these numbers that I've got here, basically you just keep timesing 1.618 by itself. So 1.618 times 1.618 is 2.618. Multiply that by 1.618, you get 4.236. So then you keep multiplying by 1.618 and you get these eventual multiples. And you can see here, as a result, because that's how we get our Fibonacci relationships, we times by 1.618. And you can see here, 28.9, one of our Fibonacci relationships gets hit very nicely. Okay. Now, this move up to 20K, this was another Fibonacci relationship. So if this was our wave 1 up to here, wave 2, and then we have our wave 3. Where's it come up to? It's come up to the 17.9. Okay, you can see it hits it quite nicely. So again, hitting another Fibonacci relationship right there. The reason I would call this wave 3 here, you can see 3 quite nice waves coming up. 1, 2, 3, 4, 5. And again, if we use our fib tool, that's our wave 1. Wave 3 is just over 1.618 extension of wave 1. And then if we do waves 0 to wave 3 of the higher degree wave 3, this looks like a triangle. So I'd start it from the end of wave 4, which is the end of the triangle, which is here. Again, we hit our 17.9. And the point I want to illustrate here is that the 17.9, it seems to be a recurring Fibonacci target for Bitcoin with its parabolic waves. Okay, and it's that 17.9, which is how I've essentially projected the further, the next wave up with Bitcoin. So if we're calling on a higher degree this wave 1 up to here, so that's our 5 waves to make our wave 1, wave 2, wave 3, wave 4, and wave 5 somewhere higher up. In order to determine where our wave 5 will be, a reasonable projection would be to use your Fibonacci tool, go from wave 0 to 3, which is up to here, and if we extend it from the bottom here, let's have a look at where 17.9 is. So it's coming in, it really depends on where you plot your price point exactly, but here we can see it's around 352,000. Okay, 352,000. Now I want to show you, it doesn't matter how far Bitcoin retraces, that 17.9 fib target will remain pretty much the same. Now let me show you, if Bitcoin comes down even further, let's say comes down to 1300, so we plot our fib extension from there, where's your 17.9? It's still 350,000. Okay, so irrespective of where Bitcoin comes down to, the next target, it's quite reasonable to call it to go to around 350,000, just because that's how Bitcoin moves. That's the personality of the chart. It moves in these parabolic moves, and typically after a large correction like we saw here, you then get a large move up, a parabolic move up, which will typically test this 17.9 Fibonacci relationship. Okay, so that's how I've essentially plotted my target. Now, what we all want to know, obviously, is what is going to happen from this point. Are we going to go up to 350,000 from here, or are we going to come down first? And so that's what we're going to address from this point onwards. So let's just tidy up the chart a little bit. As I say, this is my preferred count. I think I've made that quite clear why this is my preferred count. This is a parabolic move up to here. It's consisting of 5 waves. I don't think it should be ignored. So this is our wave 1, 2, 3, 4, and 5. On top of that, this wave here, so if this is our major wave 1, this is our major wave 2, 3, 4, looking at it from a fib time point of view, comparing wave 2 to 4, so this is the time for wave 2, comes to here, and using fib time, wave 4 would have finished around here. Okay, so that's our one-to-one relationship, which also gives a reasonable, good reason for why we might see the end of the wave 4 at this point. Okay, so the next thing I want to show you is that with all of these retracements, they stay within a pitchfork. So I want to focus, first of all, if we're calling this a wave 4, then let's just look at the amount it's retraced so far, and let's just decide if it's retraced a sufficient amount. So this is where our wave 1 finished here, wave 2 finished here, and our wave 3 would have finished up here. So our wave 4 is gone slightly beyond the 0.786, not quite reached the 0.886, so that's a pretty deep retracement. Okay. Now, just for the sake of argument, those people who are calling this a 1, 2, 3, 4, 5, then you'd be calling this a major wave 1, this a major wave 2, and obviously it needs to take a lot longer because we're correcting all of this price action. Now what would you compare that to? You would want to compare it to the last previous major wave 2, which was here. Okay, so let's do that. Let's compare it to that. Where would we be up to? So if we've retraced just beyond the 78.6% retracement, that would bring us to this point here. Okay, zooming in a little bit. It's essentially telling us that we're here. And you could argue that that is kind of what we've seen. We've seen 3 waves down. We've seen, it's a bit clearer on the daily chart. Let's go on the daily. Bear with me. All right, so just looking at it on the daily now, it's a little bit clearer. So this does have quite a bit of resemblance to what we've seen in the price action in Bitcoin down to 3.2k or 3.1k. So this is your 78.6 line here. We've gone just below it, and then we've started to go up. And I've obviously had this, if you've been watching my previous videos, I've been looking at it as a WXY playout. So this was a W down to here. Then we have an X wave triangle. So that's an A, B, C, D, E to make our X wave. And then Y comes down to here. If we just use our fib tool, so that's our W, X finishes here, extending that, we've got a 0.382 extension, which is exactly what we saw. If you, as I say, if you've been watching my previous videos, we saw the same play out. In fact, let me just show you quickly, just to show you how we got a 0.382 extension. So this was W. This is W. And then you've got your descending triangle. It's A, B, C, D, E to make our X wave, 3 waves down to make your Y wave. And this was how I predicted 3.2k previously. So W down to here, and you extend it from the end of X wave, and you get your 0.382. Okay, so the same play out, and then we've started to move up. And so let's see, what did Bitcoin do last time? How far did it move up? Yeah, because that will give us a clear indication, are we going to see the same thing play out now? So let's have a look. Let's see how high it came up. Now, I've been having a look at it, and it doesn't seem to follow fib retracement levels very well. So it's this bit here that we want to focus on, because we've seen our 3 waves down to our 0.786. Now, what I've noticed is if we look at volume at price or your volume profiles, it clearly indicates why price reversed at this level. And it's basically this overhead resistance that it did not want to go into. So just pulling up our volume profiles. Now let's imagine we don't have all of this data down here, and we want to determine where price is going to go up to. So we would just want to keep this bit of information in the chart. Up to here. Now look at where basically this is your overhead resistance here. Yeah, big volume node here. And where's your low volume node prior to that? So it's around here. If we just use our ray tool, so, and I'm going to plot it across here. Yeah, so you can see this is our low volume node. Low volume on the right hand side, there's these blue bars that are coming out the right hand side of the screen. It's very low at this point. This is the low volume node that precedes the high volume here. Now typically low volume nodes are where price reverses. Now let's see what happened. This is where price came up to. Yeah, tests it very nicely here. It basically comes up to your low volume node, and you can see even with all this price data in here, this is still our low volume node. This is where it came up to. Now the reason this is important is because this is where what price is doing at present. So price has come up to 5.8k, which I'll scroll across and show you a bit clearer. but it's come up to 5.8k and found resistance. Okay, so let me show you that now, in fact. All right, so here's your high volume node, very clear, around 6,400. Lots of people have been saying price is going here, but in fact price does not go. These high volume nodes should not be your initial target. It's the low volume nodes that should be your initial target. And look at where our low volume node is prior to this overhead resistance here. It's at this level. Again, let's use our ray just to put it on the chart. Yeah, so it's around 5760, yeah, or close to 5800. So it has so far come up to this point and found a little bit of resistance. Now this is key. If it goes higher, then it's essentially saying that it's got the power to go even higher. As soon as you go through the low volume node, it will find it quite easy to get into this high volume node because price gravitates to these high volume areas. So that will be an easy target for price once it goes beyond 5.8. And in fact, it'll probably go to the next low volume node on the other side of the high volume, which is around 7,100. Okay. So if we go above 5.8k, I would not be surprised if price then went on to 7,100. Now this is significant. Why? Because we're breaking certain parameters that mark trend. So there's two ways I look for trend and to determine whether a bear market or a bull market is finished, and those are moving averages and pitchforks. Pitchforks are the main thing that I use to determine whether a trend is broken. Now if we use this Elliott wave count, this WXY, the way I plot my pitchforks is basically just using the first two waves of the Elliott wave count. So first wave, second wave is your X wave. Okay, and we're basically just slightly above it at present. So basically the rule is with these pitchforks is when you break out of your warning line, which is this dotted line either side here, this is essentially 2 standard deviations away from your median line. Once price breaks out of this convincingly, it's basically telling you this downward trend has finished. Now it has only just penetrated it slightly here, and with warning lines or median lines, you should always keep in mind they're guidelines and they can be breached slightly. Yeah, price can easily come back within the pitchfork, even if it breaks outside of it slightly. And considering the fact that we've hit this low volume node at this 5800 level, I think we should still give the pitchfork a chance to see if it can hold. On top of that, as I say, moving averages are very significant. So it was on the weekly chart, the 50-week moving average, very, very significant. If you look at the history of that moving average, it's always acted as good support and resistance, and when price breaks it, it tends to trend. Now you can see here we've broken above the 50-week moving average, which is a sign of strength. But again, we want to know if this is going to be a genuine large time frame candle close above it, or whether it's just going to be a wick on the monthly chart, for example, and then come straight back down. So that's what I'm certainly waiting to see with Bitcoin. But as I say, we're at a pivotal level because these are two key indicators. The warning line, when that gets broken, suggests that we're going to go higher from here, and the moving average, once the 50-week moving average gets broken, price tends to trend. So if we do, as I say, from 5800, I would not be surprised if price then went to 7100, and that would be a convincing breakout from the pitchfork and the moving average. And that's why I'm saying this level is very, very significant and determines whether we're going to see lower lows or whether we're going to call 3.1k the bottom, and we're going to see price propagating higher from here, potentially to an eventual target of this 350,000. It sounds ambitious, however, that's just the nature of the Bitcoin chart. All right, so just cleaning it up again. Now, there's one other thing. There's another way this can be counted, and the argument is that this pitchfork was broken a long time ago. So if we plot our X wave here, So there's an argument this could be W, X, and this was Y. So basically just this point here needs to move. In fact, that would have been the end of X, that point there. Let's put magnet mode on just to be precise. Here you can see that the warning line would have been broken here, and that would have been in keeping with this large green candle that broke out as a result of the pitchfork being broken. Typically people watch these pitchforks, and when they do get broken, it attracts a lot of volume, and you can see what happened at that point. If we bring on volume, just scrolling across, you can see we had price declining throughout this pattern here, and then on the break of the warning line we see this large candle up on high volume, which validates this as a bullish candle. So that again is a sign of strength. So that's another argument that this warning line could have potentially broken a while ago. Now what I want to show you is how these pitchforks have demonstrated that once broken in the past, they've eventually led to price continuing on its bullish course. So let's go back on the daily and just have a look at some previous price action. So if we look at, for example, from 2014, this was our Mt. Gox crash. So here my wave count was as follows. This was a 3 waves down to make you W, 3 waves up X, and then 3 waves down to make Y. Okay, now if we plot our pitchfork, and it would be as follows. Let's just make sure the points are precise. Okay, so yeah, that's pretty much close enough. And this is a shift pitchfork, by the way. So you can see here, again, once the warning line significantly breaks out, you can see it retests and then eventually goes up even higher. Okay. Just trying to make sure these are plotted perfectly. So yeah, WXY. So that's how I was looking at it here. And again, if we come across to this price action here, so if that's our WXY, so that could be our first W, and that would be our X. So basically the WXY makes up a larger scale W. So just drawing this on the chart. So that'll be our W, X, and then Y down to here. So if we use our pitchfork for this, W, X, again. So here very nicely we test our lower warning line, and then price starts to go up. We break out, and once it's above the upper warning line, it stays above the upper warning line, uses it as support, and price continues to go higher and higher from there. The point I'm trying to make is, once it breaks out above the warning line, it's unusual for us to see lower lows. Okay, that's the point I'm trying to make here. And now Bitcoin, at present, there's an argument that it's broken above its warning line. However, I'm still giving it a chance to show me whether it's going to come back further down. So this, obviously, if this was the correct count, then it's certainly broken out of that. However, this was my preferred count, and it has only slightly broken out. As I say, I'd be happy to see price come out slightly. This would be a wick maybe on the monthly, and it will come straight back into our pitchfork. I'm very happy to see that happen, and if it does happen, price is likely to come down further. Now, how far down will it come? As I say, if we're looking at wave the 20k move being a major wave 1, and this eventually coming down further over the next couple of years, How far will it come down? Well, as I say, so far we've reached just beyond the 78.6% retracement. Scrolling across now, it eventually, so let's tidy this up a little bit. Let's zoom in. Let's take off this count. What I'm saying is we could have potentially have formed our bottom, which this bottom here, which is the 3.2 equivalent, 3.2k. Then we've come up to here, which is the 5.8k equivalent, and then we could come down lower, almost as far as the 94% fib. Now, where does the 94% fib fall for Bitcoin? So let's have a look. So if we do a 94% fib retracement, so it should be of the whole move. So let's go on the weekly, make this a bit clearer. Essentially, all the way down from here, this is the bottom, bring it to the top. As I say, we've gone just beyond our 78.6. Where's the 94? It's around 1150. Okay, and again, there's horizontal support at that level. You can see with this high here. So if we are to come down further, as I say, it could take another year or two. It could eventually come down to as far as 1100, and that may in fact start from this point today. Okay, however, if it goes higher, then we're breaking out of our Pitchfork. So personally, I do hope it will go higher. I'm very interested in buying into Bitcoin rather than having to short it. So that's what I'm hoping. I'm hoping to see Bitcoin propagate higher from here. As I say, 5.8k for me is significant. And if it goes higher, I'm expecting it to go to 7.1k. That's what I'm looking out for. So these are the main things that I wanted to point out really. Sorry, I know this chart has got really messy. I wanted to show you the two different counts. How my preferred count is not the one displayed here. It would be the 1, 2, 3, 4, 5. This is our major wave 1, major wave 2, major wave 3, major wave 4 finishing, major wave 5 goes to 350,000. That's the way I'm looking at it. That's my preferred wave count, not because that's what I want to see Bitcoin do in terms of price, but because that looks like a more regular count to me, because I'm incorporating this as a significant wave here, which other people have neglected because on the log scale it's not so obvious. But the reason for that is because this chart is distorted. Coming off our log scale, it's very clear to me. Okay, it's not going to show it properly because of all our drawings. If we take them off, for me it's very clear. This is a 1, 2, 3, 4, 5. 3 parabolic moves up. Alright, so I don't want this video to drag on too far. I will be doing more updates following this price action on the shorter time frames, but I wanted to have one complete video really looking at the long-term count, explaining how we're at a very, very pivotal level at this moment, explaining why 5800 is very key. We're approaching this overhead resistance here, and if it goes higher, we would be breaking all the trend parameters. So all the things that demarcate a downward trend. So pitchforks, moving averages, these things are key. Other people might look at trend lines, they might look at Gann lines. I've experimented with all of these, and by far pitchforks are the best. Moving averages are good just as a supportive indicator, but yeah, that's certainly what I'm looking out for. Alright guys, if this video has been useful for you, then please leave a like. If you've got any queries, I'm sure you've got lots, put them in the comments. If you're interested in my content, the way I trade, the indicators that I use, I've done a full course on everything that I've learned. So you can go to wave618.com. There'll be a link to that in the description. And also there's a limited 50% off discount that I do. There's a couple of places each month. I'm not too sure if they've gone or not, but there's a link to that at the end of the video and in the description as well. Alright guys, I think we're going to wrap it up there. Alright, take care.